Is American Tower a buy now? American Tower stock has plummeted in the last year, yet this multi-bagger compounder is still the third largest position in Chuck Akre's portfolio. He's known for his three-legged stool approach to find multi-baggers. With the company's stock price down, is American Tower on sale? We're using the Select 6 analysis to look at the most telling financial metrics. You'll want to stick around as we estimate a fair value for AMT stock, then give a rating to the business at the end of our video. This analysis is going to be intense but worth it. Along the way, there's going to be a key bonus metric that just might be the tipping point when analyzing AMT for your stock portfolio. Before we get into these valuable metrics, how has American Tower performed? Right now, American Tower trades for $165.72 per share. Year to date, their stock price is down 23%, while the S&P 500 is up 12.5%. American Tower is a real estate investment trust, or a REIT. They pay out most of their earnings as dividends. Right now, they have a big 3.71% dividend yield. Their average dividend yield is added to their stock returns. In the last decade, American Tower is compounding at 9% annually, just underperforming the S&P as of recently. Going back before the global financial crisis, in the last 18.5 years, American Tower has compounded at 13.5% annually. They beat the market over this time. Keep in mind they also pay a big dividend yield. Since the early 2000s, American Tower has returned a ton to shareholders. American Tower is trading at its 52-week lows. They're down nearly $70 from their 52-week highs. Just 1% of their shares are sold short. American Tower's a huge business. They have a $77.5 billion market cap. As a REIT, they use a lot of debt. They have a $129.5 billion enterprise value. But the burning question is, why should we be paying close attention to American Tower? American Tower owns and operates more than 220,000 cell towers throughout the United States, Asia, Latin America, Europe, and Africa. It also owns and operates 25 data centers in 8 US markets after acquiring CoreSite. On its towers, the company has a very concentrated customer base, with most revenue in each market being generated by just the top few mobile carriers. The company operates more than 40,000 towers in the United States, which accounted for roughly half of the company's total revenue in 2022. Outside the US, American Tower operated over 75,000 towers in India, almost 50,000 towers in Latin America, dominated by Brazil, 30,000 towers in Europe, and nearly 25,000 towers in Africa. Recently, American Tower has considered selling their Indian tower business. Now let's dive deep into their numbers. Metric number 1, we want their average return on capital in the last 5 years to be above 9%. Over the long run, over the course of decades, a stock's likely to return what its underlying business returns. These business returns are captured by return on capital. In this time, their returns have declined. They were at nearly 10% in 2018. In their last year, they earned just 5% returns on capital. When these are averaged out, American Tower earns 7% returns on capital, just in line with a typical business, yet down for the benchmark we're looking for. This is an X on metric number 1. Metric number 2, we're looking for revenue and cash from operations growth. This helps support their returns on capital. In this time, American Tower has grown their revenues by 47%. When we include today's numbers, which aren't shown on the chart. They've also grown their cash from operations to $4.4 billion today, which is up 17%. Both of these are up. This is a check on metric number 2. Metric number 3, we want decreasing shares outstanding. In this time, American Tower has slightly diluted long-term shareholders. They've issued 5% additional shares. This is not out of the ordinary for many REITs. However, because of the historical quality of the business, we'd rather not see them diluting shareholders. Some of Warren Buffett's worst investing mistakes came when he issued shares for acquisitions. You don't want to trade the shares of a wonderful business for something that's possibly just mediocre. You can dig into their filings to understand this more. Because they've issued 5% additional shares outstanding, this is an X on metric number 3. So far, we have one check through our first 3 metrics. Metric number 4, we're looking for free cash flow per share growth. We learned American Tower has grown their cash from operations by 17%. This outpaces their shareholder dilution of 5%. From 2018 until 2022, their cash flow per share was down. In their last 12 months, they produced $9.44 worth of cash flow. This is up from 2018. It's a check on metric number 4. So far, we're split evenly. We have 2 checks and 2 X's. Now it's time for our bonus. In our bonus, we want American Tower's dividends to be supported by their free cash flows. Right now, American Tower pays a big 3.71% dividend yield. They've grown their dividends in each of the last 5 years. The company has also grown their free cash flows over this time. American Tower has a higher dividend payout ratio today than they did in 2018. It still looks like they can comfortably support their dividend. They've supported this in the last 5 years and today. It's exactly what we want to see. This is a check on our bonus. In recessions, it's businesses with a lot of debt that can have the biggest losses or even go bankrupt. Metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their cash from operations in their last 5 fiscal years. In this time, American Tower has more than doubled their net debt position. Much of this came from 2 big acquisitions. The company acquired the European and Latin American tower divisions of Telefonica for $9.6 billion in 2021. This added 31,000 towers. American Tower also acquired CoreSite for $10.4 billion, adding 27 data centers in 2021 as well. Big acquisitions really boosted their net debt. From their debt's high watermark in 2021, they've been paying this down. Right now they have $45 billion in net debt. In these last 5 fiscal years, American Tower has produced $19.9 billion of cash from operations. That comes in at less than half of their debt position. In their last 12 months, American Tower produced $4.4 billion in cash from operations. That's not enough to support their debt loads when we project that into the future. Because of this is an X on metric number 5. There may be structural reasons, especially as a REIT, that American Tower can support these higher debt loads, though it seems like they're using much higher levels of debt than they were previously in their history. Keep this in mind as you dig into the company's filings to understand this in more detail to see if it can cause issues for American Tower or not. Now, let's estimate a fair value for their business. The big metric of them all, metric number 6, we want American Tower's average 5-year cash from operations divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we'll estimate a fair value for American Tower. Right now, they have a $129.5 billion enterprise value. This accounts for both their net debt position and their market cap. It looks at American Tower similar to it being a private business. We learned in their last 5 fiscal years, they generated nearly $20 billion in cash from operations. This means they produce around $4 billion in an average year. When that's divided by their enterprise value, it gives us a 3.1% average cash from operations to enterprise value yield. On a current basis, American Tower produced $4.4 billion in cash from operations in their last 12 months. When that's divided by their $129.5 billion enterprise value, we get a 3.4% current free cash flow to enterprise value yield. These are both below the yield of the 10-year treasury. It's below the risk premium we're looking for as well. This means metric number 6 is an X for American Tower, but we're not finished yet. Don't just throw the business out. We still need to estimate their fair value per share and give our rating. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze American Tower. This takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of American Tower's free cash flows in their last 3 fiscal years, then using historical assumptions to grow these into the future. Up to you to figure out if these are accurate or not. American Tower has been a highly predictable business in its past that may or may not continue into the future. Assuming they grow their free cash flows at a rate of 13.5% annually in the next 10 years, then in the following decade, assuming this growth rate is cut in half and they grow at just under 7% annually, we won't add in their tangible book value as that's likely skewed by the accounting in their business. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, if today's valuation multiples are the same 20 years into the future, an estimate of American Tower's fair value per share is around $91, down more than $70 from their current stock price. Keep some key points in mind. This is an estimate for the business. American Tower has high predictability in their past, but that may not be the case going forward. This discount rate is an estimate of total return to shareholders based on their free cash flows. It includes their average dividend yield and any potential gains in their stock. American Tower is also above some of their historic valuation multiples. Their stock likely doesn't get the same multiple expansion into the future that it did in the past. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our rating for American Tower, but we need to address something first. We've covered the numbers, but the qualitative factors may be even more important for this business. Why don't we find out what they are? We've got to start with the bad news first. Here are the factors supporting a short thesis. Number 1, technological advances and the move to 5G may allow carriers to use fewer towers. sales growth could slow relative to historical results because of the rolling off of Sprint contracts and further carrier consolidation internationally. Number 2, emerging Latin American, Indian, and African markets may not gain sufficient prosperity to support growth in data usage and development on par with the recent trajectory. Number 3, in acquiring CoreSite, American Tower likely overpaid for a business that will offer few synergies and required American Tower to increase its financial risk. There's a brighter side to the business as well. Let's look at the factors supporting a long thesis. Number 1, carrier investments in towers must continue as mobile data usage continues growing rapidly. Greater usage of Internet of Things, 5G, and video content should keep this trend in place for years. Number 2, wireless network development in many of American Tower's international markets is a decade behind the United States and likely requires massive tower investment by carriers as they make the transition to 4G then 5G. Number 3, with its acquisition of CoreSite, American Tower is the best positioned full-service infrastructure provider for multi-access edge computing. It appears there's outstanding concerns, both positive and negative, around their recent acquisitions. Those are some of American Tower's qualitative factors. Now it's time for our rating. American Tower, stock ticker AMT, is a REIT that checks the box on 2 out of our 6 metrics, plus our bonus. They earn just average returns on capital, but they've grown in the past 5 years on the back of 2 pretty significant acquisitions in 2021. American Tower is the 3rd largest position in Chuck Akre's portfolio. He's praised the business compared to their competitors. It's been a long-term compounder for him since the early 2000s. They both increased their debt and they've also issued some shares, yet they've grown on a per-share basis. American Tower has also supported a growing dividend. Keep in mind this isn't financial advice. Right now, American Tower doesn't look attractive compared to the 10-year treasury. When we performed our discounted cash flow valuation, if you believe those assumptions, you want a 15% rate of return, and if American Tower's multiples are steady, it looks like an estimate of their fair value is around $91 per share. It's been some time since they traded at those levels in February of 2016. That fits with their last half-decade of stock performance. When we look at all the factors of today's analysis, American Tower looks like a moderate candidate for more research. If you enjoyed learning about American Tower, like the video and subscribe to the channel for more.